might be wondering what is going on with Tesla. Well, in this video, I'm going to tell you why I think that Tesla, one of the most revolutionary companies in the world, deserves a second chance. So if you're already invested in Tesla, or if you're just thinking about it, maybe it's on your watch list, hey, should I buy some? In this video, I'm going to tell you why this actually might be a great opportunity to dip in. So Tesla was founded over 20 years ago. Their first EV launched about 15 years ago. Today, they're mainstream. They're a mass-produced EV brand. They've been an EV brand for over a decade, and they're continuing to make significant headlines despite some of the recent challenges. So today, Tesla and its CEO, Elon Musk, are facing some defensive challenges. I want to say, are they deal breakers? Well, the stock is down more than 50% from its late 2021 peak, and it's nearing its 52-week low. A lot of uncertainty around the company's future is impacting investor decisions. A lot of people have sold out. A lot of people throwing in the towel, and that's why the stock price is so low. So I want to give you some of the strengths right now for Tesla, but then I also want to give you some of the weaknesses so that you can make an educated decision on whether or not you should dip in. So here it is. Let's talk about strengths first. First of all, they are a premier brand, and they're recognized for being a premier brand in the industry. They were named 2023's Brand Image winner by Kelley Blue Book. They're also tops in luxury vehicle categories, both in combustion powered and both in EV globally. I mean, they're at the top. When we talk about cars, they have a premium product. They also have a highly integrated production. They handle most of their manufacturing in-house, as opposed to many other car makers. They stamp their own chassis, and all the way to manufacturing their own batteries. And that's just huge when a company is able to do that. They are focused, and they are financially flexible. They're primarily focused on leading in the EV market, and that has been what they have driven. They've driven it home for years now. They haven't got distracted. They've stayed focused on the prize, and they've been profitable now since 2020, which is allowing them a lot of maneuverability in the strategy department. Also, they've got a diverse product lineup. They're not, even though they're focused on the industry, they're offering different price points to different customers. Their vehicles are all over the place. They start at like $40,000 and they go up to well over $100,000 per vehicle. So those are some of the strengths, but also I want to look at some of the weaknesses, and these are just the main highlights. So some of the weaknesses, well, first of all, Elon Musk, as much as you love him or hate him, he's a controversial CEO. And his actions, particularly post 2022 Twitter acquisition, they have impacted Tesla's stock price a lot. Another weakness is that they have a limited owner support infrastructure. Or in other words, they have sparse charging stations across the country compared to gasoline stations. And that's just a big hit on them. A reason a lot of people say that they don't want an EV today is because they say that the infrastructure is not there, and to their point, they're correct. That's a weakness. Also, there's a decline in EV interest. When I look at the numbers, the U.S. consumer interest in owning an EV has dropped from 49%, a height of 49%, down to 41%. And then also competition. The competition's cashing up. Competitors like BYD and traditional car makers like GM and Ford, they're catching up. Even though Tesla was out front, they were leading the pack, these other competitors are now, they're catching up. They're providing the competition that Tesla didn't really have a few years ago. So when you consider all the strengths, all the weaknesses, despite them being a premier name in EVs, there are current challenges that are suggesting maybe that investors should look somewhere else to put their money. I mean, Tesla, it is facing significant competition, operational challenges, and it's affecting its market position and its investment attractiveness. But I didn't make this video to scare you away from Tesla. In fact, I actually really believe in the company. But I had to go through that to show you and tell you that, yeah, there are some challenges. But like I said at the beginning, I believe in Tesla. I actually believe in Elon Musk. I think he's a great innovator. I think he has some great ideas. And he's not scared to try new things, which is one of his great strengths. But, you know, like I said at the beginning of the video, the shares hit an all-time high of $409.97 in November 2021. And they're currently trading nearly 56% below the all-time high. And it's due to several market challenges that we've discussed. And really, to summarize those challenges, I think it's really three things that have caused the stock to drop down to where it's at today. First of all, weak EV demand in a high interest rate environment. There's just not as many people wanting EVs, especially with the high interest rates. Number two is a slowdown in China's EV market. China had they're huge. They're the biggest EV market in the world, and they're experiencing a huge slowdown. And then finally, the third factor that's really affected the drop in Tesla price is the declining margins from multiple price cuts that Tesla's had to do so that they could stay competitive. But let's look at the long-term attractiveness, because that's what I'm looking at. I don't care about short-term headwinds as long as the long-term prospect is positive, and it is. Their aggressive price cuts have actually stimulated demand. They've put forth efforts to reduce production costs. They have significant financial capacity in case they need to cut prices even further. They're not at the bottom. They can cut prices more and remain profitable. And they're focused on making vehicles affordable in this high interest environment. And really, they're playing the game right. And that's why I love this company. They have a competitive edge over those that are trying to come up from below. They are the most profitable pure play EV company as of 2023. Their competitors are struggling to afford similar price cuts. Their strategy to protect margins is this: they're going to redesign the vehicle. They're going to improve their manufacturing. They have logistics optimizations and supplier renegotiations that are happening right now. And they're developing advanced manufacturing technology so that they can have cost-efficient production. Guys, I'm telling you, Tesla's on top of it. Their financial health, because that's a big question. Where are they at? Are they healthy? Well, they ended 2023 with $4.4 billion in free cash flow. If that's not healthy, I don't know what's healthy. They've maintained their investments in future prospects despite the price cuts with their products. And that means that Tesla is committed to the future, and that's why I love this company. So when we look at their opportunities for growth, I see a few of them. They're innovating in manufacturing technology. They're creating next generation vehicles. Their expected production of compact vehicles, they're expecting it to be done by the end of 2025. We're going to see Tesla creating compacts, which is going to be crazy. They have plans for factory expansions in Texas, in Mexico, and even possibly a third international location. Their autonomous driving technology, it's huge. It's a key catalyst for their growth. And I'm telling you, when it comes to their AI segment, we haven't hardly even talked about it, and I don't even have time in this video to go through it all. But their development of the Dojo supercomputer for AI model training, that's massive. Tesla is an AI company, and AI is booming right now. Their potential for robo-taxis, their proprietary AI chips for autonomous driving and AI tasks is massive. I'm telling you guys, Tesla has got a future, and the future looks bright. So they missed their revenue and their earnings estimates in 3 of the last 4 quarters in fiscal 2023. They're trading at a significantly lower PS ratio compared to historic averages. But you know what? I think this is an attractive entry point for those long-term investors that are focusing on Tesla's growth potential and their technological investments. Guys, I haven't bought into Tesla yet, but I am considering it like never before. I've been watching this company for a long time. It is awesome. I mean, I'm personally an Elon Musk fan. The guy is incredible. He's not perfect. Nobody's perfect. But look at his track record of delivering quality products. And Tesla, I mean, it's a healthy company, guys. And it's got a lot of runway to run with. Anyway, guys, that is the end of this video. If you liked the video, leave a like, subscribe for more videos like this, and hey, share the video. Leave a comment down below. Tell me, do you agree? Do you disagree? Are you bought into Tesla? Do you think it's all hype and you're staying away from it? Are you looking at other companies? Let me know down in the comments. You guys, you'll have an awesome day. I'll catch y'all next time.